If you want quick wins in the Forex market without sitting in front of the screen all day, scalping might be your game. Today I'll show you a fast, repeatable scalping strategy that works on any Forex pair. Let's get into it. That's scalping. It's all about those tiny price movements, not the big picture trends. To catch these quick moves, you'll focus on low time frames, like the 1 minute and 5 minute charts. You're essentially riding the waves of momentum, not the long-term trend. So if you like fast-paced action and disciplined trading, this could be your style. Let's get into the nitty-gritty. Whether you prefer Forex, indices, or gold, it's all good. First up, what is scalping? Imagine being in and out of trades within minutes, grabbing small but consistent profits. Your best bets are the London Open from 8 to 10 a.m. GMT and the New York Open from 1 to 3 p.m. GMT. These times usually have more activity and volatility, which is what you need for scalping. We wait for a rejection candle with a lower wick touching the IMA. Price keeps moving upwards, showing us the direction of the trend. If the market moves against you, don't panic. Knowing the difference between a short-term correction and a reversal is crucial. A correction is a temporary pause in a trend, while a reversal is a change in the trend direction. Here's how to spot them. Exit the trade when your stop loss is hit. It's what the strategy is built for. Then it pulls back towards the 20 IMA. We wait for a rejection candle with an upper wick touching the IMA. When we see it, we enter the trade. Our stop loss goes above the previous swing high. The market is still in an uptrend. On the other hand, if the market breaks below the 20 IMA and shows bearish momentum, it might be a reversal, so patience and self-control are key. Don't force trades. Only take 1 to 3 solid trades per session. When scalping, you're not trying to predict the market, you're reacting to it. Now it starts to move upwards, pulling back towards the 20 IM. We wait for our signal. The market gives us a green dot, indicating a potential bullish move. We enter the trade. This strategy is just one tool in your trading arsenal. Experiment with different setups and find what works best for you. It's about progress, not perfection. So start small, trade less, and win more. Our stop loss goes below the previous swing low, and we target a 1:2 risk-reward ratio. The market moves in our direction, hitting our target and closing the trade. We made a profit. Let's walk through a real chart example. We're looking at GBP USD on the 5-minute time frame. Our strategy is simple. We want to see an uptrend with a pullback to the 20 IMA and then enter once there is a clear signal. If you feel hesitant, don't trade. Also, accept losses as part of the journey. Every successful trade involves a calculated risk. Your edge comes from your discipline, not prediction. Stay sharp, stay focused. Scalping is about speed and precision, not luck. But doesn't show much momentum, it might be a correction. The market is still in an uptrend. So you would likely want to consider a buy position. In a downtrend, if the market breaks below the 20 IMA and shows strong bearish momentum, it might be a reversal. We simply reacted to the market and took advantage of a potential move. The trend direction could be changing, so you would likely want to consider a sell position. And start showing signs of a potential reversal. Look for selling volume and a break of a key resistance level. If these signs appear, it could be time to consider a short position. Similarly, if the market is in a long-term downtrend and starts showing signs of a potential reversal, look for buying volume and a break of a key support level. If these signs appear, it could be time to consider a buy position. The trend direction could be changing. Use this along with your knowledge of support and resistance levels to help you make decisions. And we look for a 1:2 to risk-reward ratio or the next resistance level. The market keeps rising after our target hits and we grab another win. If the lines are in the overbought zone and the market is showing signs of a potential reversal, it might be time to consider a sell position. And if the lines are in the oversold zone and the market is showing signs of a potential reversal, it might be time to consider a buy position. Remember, it's all about reading the market and making informed decisions. Once we see it, we enter the trade. Our stop loss goes below the previous swing low, and we look for a 1:2 risk-reward ratio or the next support level. In this case, the market keeps falling after our target, giving us a nice profit. Avoid the low volume periods like during the Asian session. It's not as exciting. To keep things simple and fast, we'll use just 3 tools: the 1 minute, 5-minute time frames, and a few indicators that will help us spot opportunities quickly. Since we're making multiple trades, we need to keep each trade small. Aim for 0.5% to 1% of your total account for each trade. Don't increase your position size just because you're scalping. Stick to your plan. Also, always use a fixed stop loss. Never move it. And when you see a winning trade, take your profits and close the trade. Keep it simple and let the price do its thing. When you see a clear trend and a pullback towards the 20 EMA, that's your cue. Sometimes the market will move against you. If that happens, stick to your plan and exit the trade when your stop loss is hit. It's part of the game and the key to success in the long run. If it's an uptrend, wait for a rejection candle with a lower wick touching the IMA. If it's a downtrend, wait for a rejection candle with an upper wick touching the IMA. This candle is our trigger. It shows us that the market has rejected the IMA and is potentially ready for a quick move. Once you see that candle, enter the trade. The market is showing momentum, and we want to ride that wave. First, let's add the 20 EMA indicator. This helps us identify the current momentum or trend direction. For stop loss, place it below the swing low if it has an uptrend, or above the swing high if it has a downtrend. In simple terms, put your stop loss where there was a recent low or high. For take profit, aim for a 1:2 to risk-reward ratio or better. If you're feeling confident, you can also target the next support or resistance level. But remember, sometimes the market doesn't play along. Be prepared to exit early if needed. Think of it as a guide showing where the market is heading. Next, enable volume. This shows how many traders are active in the market. And lastly, you can add either RSI or stochastic to spot when the market might be getting tired and about to reverse. Remember, this is for short-term exhaustion, not full-blown reversal yet. Now here's the beauty of our setup. We're going for clean charts. No need to complicate things. Let's talk entry stop loss and take profit. This strategy is great because it's fast, has a good risk-reward ratio, and works with almost all major and minor currency pairs. Before we dive into some real-life examples, let's cover the best time to scalp. Next up, risk management. Now let's look at some examples. Check out this chart. Price is moving downwards, showing a clear downtrend. Now it pulls back up towards the 20 EMA. But remember, not every trade will go your way. Alright, let's look at another example. This time the market is in an uptrend. But again, even in an uptrend, there can be pullbacks and reversals. It's important to know when to hold and when to fold. During an uptrend, if the market breaks above the 20 EMA and shows strong bullish momentum, it's probably a correction. For instance, if the market is in a long-term uptrend, also consider using the RSI or stochastic indicator to help you spot when the market might be getting tired. Let's look at a couple of examples. In an uptrend, if the market breaks above the 20 EMA. But remember, no indicator or strategy is perfect. Always do your own research and analysis before making any trades. Now let's talk about the psychology of scalping. Due to the fast pace, it requires a calm and focused mindset. You're making multiple trades in a short period. And finally, focus on execution, not outcome. So here we see price moving downwards. This is our downtrend. As you can see, the strategy is fast and efficient. We didn't hold the trade for long. Scalping isn't about luck. It's about patterns, speed, and mental control. Comment below Scalp Mode if this strategy makes sense to you. And hit subscribe for more raw, unfiltered trading content. Thanks for watching. Until next time.